The recent dip in Google's stock price has a lot of people talking, some even panicking. But is this selling justified? Well, in this video, I'm going to be explaining to you why I believe this sell off is an overreaction and why I remain bullish on this company, even adding to the position in the portfolio. Hola, mi gente. Welcome back to Latino Investor. We have a lot to get into in this episode, so let's jump right in. Google's parent company, Alphabet, reported Q4 earnings last Tuesday, and they did report slightly weaker than expected earnings in certain areas. Expected revenue was $96.6 billion compared to the 96.5 billion of revenue that they reported. And Google Cloud revenue was expected to be 12.2 billion of that. But Google's cloud computing division reported 12 billion in fourth quarter sales. So there is some concern about slowing growth in their cloud division. And also, Google is planning to increase capex spending to about $75 billion in 2025, mostly in data centers that power AI for their clients and their cloud business. But here's where I think the market might be overreacting. Let's look at the bigger picture. First, let's talk about revenue. While growth may have slowed slightly, Alphabet still reported a substantial revenue growth. Revenue was up 12% year over year from 86.3 billion to a staggering 96.47 billion. And although it's not the most impressive revenue growth Google investors have seen, this isn't a company collapsing. It's a company experiencing normal fluctuations in a massive competitive market. Let's consider their dominance in search and advertising. While competition is increasing with newer ways to search for information, Google still holds a massive market share. Let's take a look at Google's market share since ChatGPT was introduced in November of 2022. If we analyze this graph showing the search engine market share worldwide, we see that Google has dropped a whopping 3% since the launch of ChatGPT. Furthermore, let's analyze Google's revenue from the search business since ChatGPT was launched. Here we see that we're on Qualtrim.com, and Qualtrim has this cool feature where we're able to strip away the different components of Google's revenue by segment. Here we have separated Google's revenue by just the revenue from Google search. Since ChatGPT's launch in November of 2022, we see that revenue for Google search has gone from $42.6 billion to $54.03 in the last quarter. ChatGPT was supposed to destroy Google's search business. Yet 2 years later, we are seeing Google growing the revenue in this area. It's not fantastic growth, but it's still growing year over year. Third, let's talk about the cloud. While growth might not be exploding as some predicted, Google Cloud is still a major player. Analysts were expecting 12.2 billion in cloud revenue, but Google reported 11.97 this last quarter. However, if we zoom out, we see that Google Cloud revenue is up almost 30% year over year from last Q4 of 9.19 billion. And they're investing heavily in this area, with them stating that they will increase their spending to 75 billion in data centers that help power this area of the business. Fourth, and this is crucial, look at their diversification in revenue. Alphabet is not just Google search anymore. They also have YouTube, which continues to be a powerhouse with over 2.5 billion monthly active users. They're also investing in cutting edge technologies like AI and autonomous vehicles through Waymo. These ventures have the potential for massive future growth. So yes, Google may not be growing as quickly as investors want, but I believe they are making the right decisions to continue growing their business. And that is something investors need to ask themselves when analyzing the company. What do I prefer? For Google to return 75 billion back to me in the form of dividends or share buybacks? Or would I prefer they use that money to cement their position in the cloud computing space, which is proving to be a highly profitable business? For me, I would prefer they keep reinvesting in the business. I believe AI can help cloud become a much higher margin business, and I'm very pleased with their growth in that area. I think they're making the right decision. And this company is not trading at a demanding valuation. With a trailing PE ratio of 22 and a forward PE ratio of 18, I believe this stock is undervalued. So the further Google drops, the more I will be buying. That's going to be it for today. Hasta la próxima, mi gente.